On board Dharmesh Kant as well, Head Equity Research at Cholamandalam Securities, joining in on the show right now. Dharmesh, hi, great to have you, Neeti. Now, what is it that you're making of this risk off that seems to be somewhat playing out, led, of course, by correction in US equity markets, trickle down to Bitcoin, and then, of course, what's happening even with precious metals?
Yeah, Dr. Aisha, I think it's more of a trading kind of a sluggishness which is happening in the market because as far as Q2 earnings rolled out, it was a tad better than what the expectation was by the time it the concluded when the earnings were concluded. And I think if you remove the Tata Motors from the basket, then even Nifty 50 gave around 10% kind of earnings growth. We were going by 8 to 9% kind of earnings growth for Q2. So that was quite encouraging. I think the market needs a fresh leg of trigger for Indian markets to, carry on from here. But the range has been 25 to 26K, and that trigger can come either in the form of tariff settlement with the trade tariff settlement with the US. And then we have, month of January where, Q3 earnings will pick up and the budget expectations will roll out. Having said that, in light of the churning which we are seeing, one thing which is very clear in the market is anything which is expensive, I mean, which is trading at a PE multiple of 70, 80 or 60 northwards kind of a PE multiple, but the growth has been restricted to 20-25%. There we are seeing a heavy, churning happening into place. So you have to be very lucky to get your trading bets right. As far as investments are concerned, I think BFSI remains the, tried and tested sector to be in, along with defense names. The defense space is also looking pretty attractive and some infra plays. So these are three sectors where I think there's still scope of continued traction of bull run even in this couple of months if you are trading the market.
Okay. Okay. All right, Dharmesh. But Dharmesh, let me come to you with regard to this entire QSR space. Uh, it's not been the best performing sector or subsector, if I can call it that. Opportunity here for making a decent return over the medium term.
Hush, it needs to be seen. I mean, how this pans out. Definitely, this is a positive news for QSR players. And what went wrong with, say, Devyani, Sapphire, or Westlife was they went into store expansion. In dining, the cost, unit cost, they went horribly wrong. In that, they were unable to, capitalize on same store sales growth after the stores were set in. And that's the disappointment which happened. Whereas if you look at Jubilant Food, they carried with their model of takeaway kind of a delivery, and that is where they gained, mileage from others. So I think this IRCTC tie-up is definitely a welcome move because there again you will have a better margin and better commission with the legs of asset light kind of a model. So trading play, I think market will definitely give them a benefit for this news flow. But as far as long term, it has to be seen how much market they are able to capture. But short term and medium term, as you have rightly pointed out, definitely our trade is on. But our topic in this space remains Jubilant Food.
Okay. All right, Dharmesh. Kunal, do you have a view with regard to some?
I think today also the stock tried to inch back above its 200 DMA, but not a great or an exciting chart about for Mahindra Holidays. The stock has been struggling for the last 2 or 3 months. In fact, a couple of months back the stock was almost at 380 and had corrected towards 310, 315 mark. So I think in that sense the stock is still into a downward trend. Current level wise, yes, the stock is trying to inch back above its 200 DMA, which is placed at 335 levels thereabout. So a convincing close above the 335 levels is where we can anticipate a change of trend for the stock price. But as of now, maybe a wait and watch.
Okay. Dharmesh, let me zoom out a little bit. Let me try and get your take. And you track earnings quite closely. I know that. You also track commentary quite closely. Give us two pockets or two sectors or subsectors or names where the commentaries really stood out for you and something that you absolutely didn't anticipate. These are not picks. I'm just trying to understand what themes really stood out for you.
I mean, there was no surprise, Harsh, this time around. And even if you look at IT, the commentary was muted with a cautiously optimistic kind of a stance, which has been their usual takeaways for the last 2 years. So they maintained that. Renewable energies were, very excited about their prospects, and I think going forward 2 years, all the renewable energy plays, be it IPP, independent power producers, or the solar module makers, they will continue to get a good, run rate going forward. But valuations are a matter of concern, so that's why we are not seeing a stock price movement. BFSI, the entire space was very encouraging, and the commentary as far as NPAs are concerned, asset quality was pretty encouraging, barring a Bajaj Finance, where the asset quality still remains a bit of a concern out there. But that looks pretty exciting. Banking space, PSU banks or private sector banks, all has been doing well. Axis Bank was a top pick out there. The only caveat I would like to throw a light on the banking space is with CRR cut rolling out finally 29th of November. So you will definitely have an elbow room of 20 or 15 bips on the NIMS front, and NIMS, the transmission has stabilized. But in case further rate cut happens, seeing how the inflation is panning out, then again you would be back to square one or single digit kind of a growth run rate. And the outlier to my mind in the entire large cap space was Reliance Industries, where the retail division did pretty well compared to their peers. And I think going forward, that can still be a re-rating candidate. So net, Harsh, to sum it up, BFSI stands strong. No surprises there. That was a good news. At the same time, defense has been pretty good. So look at BDL numbers for HAL, BL. They all are doing pretty well. Metals are playing in and out, and it will be the case story like that. And pharma, particularly like Lupin, came out with good set of numbers. Zydus Life Sciences or a Torrent Pharma. That is one space one should be focusing on, where a lot of traction is happening as of now. But that's the sum of it. I mean, it's pretty much in line.
Right. Dharmesh, along with, of course, the outperforms, it's also important to analyze what to avoid, right? Basis your analysis of the Q2 earnings, what is it that you think A is either priced to perfection or doesn't have growth, so should be a clear avoid?
See, Aisha, as far as price to perfection is concerned, I think auto space is priced to perfection now. The entire automobile space, be it four-wheeler, two-wheeler, that looks pretty much all the future growth for at least 1 year seems to be priced in. Renewable energy, again, the solar panel module manufacturers, they are priced to perfection. And barring this, if you, what's the clear avoid to my mind where a lot of Hullabulla has been there is the FMCG space. So I don't think they are going to come out with miracles of say 10% kind of a volume growth with some price realization 1 2% translated into 40 50% kind of. That is very much unlikely. They will continue to be a mid-single digit kind of a growth run rate. And putting that in perspective with the valuation multiples they are sitting on. So that is one space which we are totally, avoiding for quite some time. What can look well going forward is tourism and travel and tourism industry, the hotels. So Q3 and Q4 usually is good season out there. There, I think Indian hotels can come out with a good surprise after a muted Q2, followed by say Taj GBK. So where the valuation comfort is there. So these are the areas which are looking. But clearly, FMCG in one space. I mean, HUL, ITCs, Davos, and Maricos of the world should be avoided.
Uh, you know, First to Dharmesh. Dharmesh, if there was one sector that you're super bullish about okay, so we've lost Dharmesh. Kunal, talk to us about how you expect the rest of the week to unwind, given the move we've seen today. Is this an opportunity in terms of a trade tomorrow? And how do you see the index move for the rest of the week?
Yeah, it could be an opportunity, Harsh, but in the fourth attempt towards 26,000 mark in the last 1 month. 23rd October is where we tested 26,000 mark, and in this last 1 month, approximately 4 attempts, and all 4 attempts towards 26,000 mark have failed. Earlier the retracement was 200 points, then was a retracement of more than 750 points for the Nifty. So I think it's getting a little bit of a more habitual trend for the indices to struggle at the 26K mark. Maybe I think this could be another round of corrective wave for the indices, but the only change which has happened is right now the global markets have started to correct, and they have corrected far more sharper in the last 1 week. So that could keep the markets more under check over the index on the higher side at 26,200 levels. Unless the global market starts to come back or make a bounce back, and a decisive bounce back as such, I would probably expect that we may just about lie around this 26,000 mark plus minus 200 points.
I'm going to throw in one more question. IT. The move today, 1.2%. It doesn't look pretty for IT. Last, I believe, out of 4 sessions, 3 sessions we've closed in the red. One session we've closed largely flat. No real move. What next for this one? Is it a worry for you?
It's not a worry, Harsh, because there was a 2,000-point rally for the IT index.
Yes.
34,800 to 36,900, and from there now we've ebbed off 900 points so far. We've come to 36,000 mark. So which means we've not even retraced 50% of the gains which the IT index had shown. And this is start of November. The IT index had rallied up. So which means we are just trying to just consolidate over here. Unless we break below 35,800, 900 mark on the IT index, I would still call it as maybe a buy on dips category.
Okay, still the buy on dips, but lots of other weak pockets in the market today. Look what happened to realty, look what happened to auto. But we'll discuss all of that tomorrow. Seems like we're headed in for another weak day on the global markets, but let's see how the handover pans out overnight. For now, it's a goodbye from all of us right here on Closing Trades.